And this morning, we got the latest Deloitte CFO signals report. It showed that 55% of chief financial officers expect a recession in this country by the end of 2020. CFO optimism about their own companies declining pretty sharply, now at the lowest level in about 3 years. Only 23% of CFOs see favorable conditions in Europe, and 24% see favorable conditions in China. What's an investor to do? We bring in today's closer, LPL Financial Chief Investment Strategist, John Lynch. John, what's an investor to do?
Hey, Lauren.
Good to see you.
I think investors should, thank you. I think investors should take advantage of the recent weakness in the market. We've had a great 7 or 8 days, and as Jerry just mentioned, we climbed out of the correction territory, but we have to be mindful this on the S&P 500, this 2600 to 2650 area, this is where the work starts, right? Because when we broke through 2600 a couple of weeks ago, we just dropped like a rock and there was no technical resistance coming back. Now we have some resistance, and I'm counting on the market to be able to power through that with what we should have pretty good earnings beginning next week.
We get a lot of the bank earnings next week, particularly, and they could be very sensitive to interest rate increases. What did you make of what Fed Chair Jerome Powell said today?
Yeah, he has to thread the needle so carefully, right? Because he wants to make sure his official mandates are to keep a lid on inflation, ensure as full an employment situation as possible. I think he's accomplished both those objectives, but he has to be mindful of the curve, he has to be mindful of currency, he has to be mindful of the markets. Yeah. And I think his comments today were very important because people might have gotten too giddy relative to his meeting a week ago with former Fed chairs. To the degree that he's talking about sticking with balance sheet reduction, that has upward movement on market interest rates, and I think that bodes well for net interest margins for the banks.
Yeah, and Washington affects all of this. They used to say that gridlock in D.C. was good for Wall Street, but maybe with this partial government shutdown now in day 20, that's not the case. How do you see the shutdown affecting Wall Street?
Yeah, historically, the shutdown really sees a flat market, and we're up 7, 8, 9, 10% during this one. So it's kind of a curious development. I think there are other factors we have to keep in mind. I'm focused, and we're trying to get our investors to focus on the fundamentals of the fiscal tailwinds, whether they be fiscal tailwinds suggesting 2%, 2.1% of GDP this year, with taxes, regulation, repatriation, low inflation, and a Fed that won't be as aggressive. So we believe that will be positive for equities.
What sectors do you like specifically?
Well, you mentioned financials earlier, and we're still focused on financials. We continue to be overweight that sector. We're still leaning toward value as well, which was a humbling endeavor last year, as you know. But with financials and energy making up 40% of the value sector, I think you're going to see that sort of, creeping returns higher and gaining ground on growth within financials. I think the asset managers may have some difficulty because of compressed margins, but I still think money center banks and regional banks should do well.
Okay, and what specific stocks do you like right now?
Well, I can't comment specifically on stocks, but at the subsector level, I can go as deep as, the regional banks benefiting from a steepening yield curve and improved net interest margins, for example.
Okay, and what in tech? You had the tech sector on there. What part of tech are you liking right now? We got the warning from Apple, some of the other chip makers as well, but then you have Netflix that really looks like a star, taking on Hollywood with all their content and everything else.
Exactly. We're financials and industrials on the overweight as well as tech, right? So it's kind of a barbell strategy. With the growthier names in tech. But I think when you're looking at technology, make the delineation between consumer and who's going to benefit from business investment. And I still think, the software group has an opportunity to grow as well as the semiconductors from a business investment standpoint.